We kick things off tonight with Josh Lipton and more on Microsoft's big quarter. Josh.
So, Melissa, for Microsoft, these are just strong beats across the board, not just the bottom and the top, but look at these segments. Revenue and productivity and business processes, $13.4 billion. That was an increase of 13%, better than expected. Within that, Office 365 commercial revenue growth, 21%, 20% constant currency. Intelligent Cloud segment, $14.6 billion, also a beat. Within that, Azure revenue growth, 50%. That was certainly better than the estimates I was seeing. Morgan Stanley, for example, was looking for closer to 41% in the quarter. And finally, revenue in more personal computing, $15.1 billion. That's an increase of 14%. Also a beat. I did check in with Kirk Materne over at Evercore. Want his quick take on the quarter. Bottom line for Kirk, very strong results across the board. Azure, he says, blowing out expectations with that print. Office 365 commercial business up 20%. You are seeing, Kirk says, strong monetization trends of offerings like Teams. As the economy reopens, Kirk is betting this could be the start of several very strong quarters on the commercial side of Microsoft's business. This conference call, remember, kicks off at 5:30 Eastern, at which point we'd expect CFO Amy Hood to give us guidance. Melissa, back to you.
All right, Josh, thank you. Josh Lipton. Guy Adami, what do you make of this quarter with the stock moving higher after hours?
A number of things, Melissa, and I'm glad you mentioned that there's 2 hours tonight. Hopefully I'll have a chance to run to the men's room at some point. But what I'll say about Microsoft is it just shows you how lousy IBM's quarter was. I mean, I had Azure growth at 48%, but we're splitting hairs with Magnum PI there. But the thing that really stuck out to me was the fact that operating margins of 41.5%. I think the street was at 37%. Now, last night we talked about Apple trading at 32 times next year's numbers, and we talked about valuation. Well, I tell you what, Microsoft at 32 times, given this quarter and given the growth rate, to me is still extraordinarily reasonable. We're now above the September 2nd high, which I think is 235. That's your level to trade around. We really haven't wavered on this name for a long time, and I think you stay the course. This quarter gives you no reason to get out.
48%, I think, is in constant currency. Correct me if I'm wrong, but the street is going with the 50%, which is better than what was expected, and of course better also compared to last quarter. Dan Nathan, where do we go here with Microsoft?
Well, listen, it's doing kind of what Apple did. It kind of rallied into the number here today, closing at a new all-time high, which is actually fairly impressive when you consider the rotation that we saw out of mega cap tech over the last few months. So you're seeing piling into the stuff that worked really well last year, and it worked early in the pandemic. You know, I'll just take it a bit more macro here, Mel. Obviously, Microsoft did everything that they needed to do and then some. It was a very high bar. There's 40 analysts who cover this stock on the street, 37 of them rate a buy, 3 a hold, no sell. So the fact that they put up that beat, let's see what the guidance looks like. But I would just push back for 1 second here. Trading at 31 times next year's earnings and 10 times next year's expected sales, I would say with expected EPS and sales growth of about 10%, the stock is really rich on a very historical basis. So unless you're telling me that valuation really doesn't matter anymore, and maybe it doesn't if you are a $2 trillion behemoth, which is what Microsoft is likely to open at tomorrow, then fine. But I just don't love the crowding right now in these names. I was optimistic that they'd put up good quarters, but the fact is we're going to have Apple and Microsoft at $4 trillion in market cap. Everyone's on the same side of the boat here. That makes me a little concerned.
Or maybe valuation doesn't, and we've had the conversation so many times, or maybe valuation in this market doesn't matter. In a market in which earnings power and earnings forecasts are so flimsy going into the next year, and maybe Microsoft, Karen, is an example of one that can, in fact, forecast pretty well where it's sitting right now.
Well, I guess we'll have a clearer picture after the call, but I mean, points Guy and Dan made, that this was a really high bar to come into and beat. And I mean, to me, these revenue beats, the size of the revenue beats, that's kind of amazing when you're already at such a big size as a company, and to be able to have, you know, in various divisions, 10% revenue beat, not just growth, beat. That's kind of amazing. So they deserve to trade at a premium multiple. I'm not really sure what is that premium. I'm not quite sure. Remember, they do have a ton of cash, so you have to back that out when you think of how expensive the enterprise value is. But they also, it sounded like on some of the language that I did read, we'll hear more in the call, but it didn't sound like they felt like they were really pulling forward. It sounded to me like they see this as a secular change that will continue. So I'm staying the course here.
Yeah, they're in the right parts of the business. I mean, in terms of cloud, they're the second biggest cloud vendor in the world. behind Amazon, Tim. They're in video games. They just released new consoles. I mean, they're in the sweet spot for this economic environment.
Right, and again, this was a Dick Fosbury kind of a bar who
Can you remind us again of Dick Fosbury, because I think there might be new viewers who might not have caught the reference in the past, and we all want to know.
Dick Fosbury, he perfected the Fosbury flop, which was a way of going over the high bar. What more needs to be said? I mean, it was a thing of beauty, it was a thing of art. Much of what Microsoft has done today, again, the commercial cloud revenues of 34% growth. I mean, the street was somewhere 25, 26, 27. Gaming. Let's talk about gaming. Gaming is now about 12% of sales. It's extraordinary, and the multiple that's being discussed here. Caution flags, except for the fact that it's rewarded that multiple and it's been re-rating on a higher multiple really for the last 3 years. And a cloud mix that is now north of 40% means that on top of Azure, you've got pillars of strength that are, I think, probably worth investing in. Guy talked about the levels on the stock, getting through this 235 level. Look, the stock, largely from those July 9 highs, had done very little and had moved kind of in a range from kind of 210 to 225, 230, with a lot of mega cap tech doing more than that. This is an emphatic breakout, and maybe you don't buy it tomorrow morning, but it seems to me that the stock had actually consolidated around what had been two fantastic consecutive quarters.
I see Guy raising his hand, and I'm tempted to just ignore it. But go ahead, Guy. What would you like to contribute?
No, I know you make me feel as if I was at home, which I am, by the way, if you ignore me. No, I don't. Far be it from me to correct him in such a public forum, but Dick Fosbury didn't perfect the Fosbury flop. He actually created it. Dwight Stones perfected it. And folks, in the NBC world, that's the more you know.
That's the more, fast money, a font of tradable and useless information. Remember when IBM reported, Dan, and what did they report? Cloud and cognitive services down 4.5% year on year. When you compare that to Microsoft's Azure, and granted, it's not completely apples to apples, it's maybe like apples to pears kind of comparison, but in terms of the order of magnitude difference between the two, it's tremendous. What does this tell you about IBM and the challenge it has as it goes towards the spin-off later this year?
It tells me that IBM is really just... listen, I took it off my main board. I don't even have it on my screen anymore. I think Palantir is where it used to be. I mean that really seriously. I haven't looked at IBM since Palantir went public a few months ago through a direct listing. And here's the thing about IBM. I'll just tell you. Did you notice, even in this crypto craze, they stopped running that... you remember that tomato that used to make its way around the world on the blockchain? This was probably 2017, 2018. They don't do that. They were chasing every shiny object over the last 5 years, and they've absolutely gotten nothing right. So you tell me if they're going to get this Red Hat thing right. Obviously, the person in charge now is the one who used to run Red Hat. I just don't think so. Listen, as far as Microsoft, I want to go back to that for 1 second here. I think all these guys are right. I mean, listen, this thing is just, they're just doing everything right, and they're just like flexing right now. But I guess at some point, you just have to decide, right? Like, how many $2 trillion sort of names can continue just to box out everything else? And that's a bit of a concern. And don't think for a second at some point people are going to wake up and say 31 times earnings and about 10 times sales is expensive, especially if we start to see interest rates kind of creep up a bit more, which I think this panel thinks is going to happen. So at some point in 2021, you better watch out below in some of these very crowded mega cap tech names.
We saw interest rates creep higher, though, Dan. It didn't fall out of bed.
Well, hold on, Mel. Did it do anything over the last few months until just about literally a couple weeks ago? I mean, the stock ran 10% in a straight line into this print. It's up 5.5%. I'll bet you this, that this stock fills in that earnings gap over the next couple of weeks. You're a little bit of a market historian. You've been doing this a little bit. You often talk about how often some of these early leaders in the earnings season, they kind of get that little, jitterness out of the way or whatever. We saw Netflix gap up 16%. It gave back almost half of that, trying to fill in the gap. You might see Microsoft do that over the next couple of days, too.
Do you agree with our friend Dan, Guy?
We got 2 hours of Salty Dan tonight. I am so far. I know exactly what he's saying. Listen, he's going to be right. My only point is, again, we mentioned IBM at the top. I mean, this just illustrates this Microsoft quarter, how lousy IBM's quarter was, number one. Number two, if you like Apple at 32%, 32 times next year's numbers with their growth, I think you have to love Microsoft at 32 times with their growth. That's my point. But to Dan's, the point about trading he makes, yeah, you could absolutely see it trade back down to the mid-220s. I just think you're probably going to see north of 250 before that.
Shepard Smith here. Thanks for watching CNBC on YouTube.